Brazil, the largest nation in South America, is well known for its football prowess, diverse cultural life, and rich biodiversity. However, the nation also faces serious economic difficulties. Brazil's economy has been severely impacted by the recent economic crisis, triggering significant setbacks and raising concerns about its recovery. It is plagued by high inequality, corruption, and a history of poor management. And we have mentioned some reason behind the Brazil economic destruction, and they are divided in 6 chapters. Income sources. Before the collapse, Brazil's economy relied heavily on several key sectors. The country was a major exporter of commodities, particularly agricultural products such as soybeans, coffee, and sugar. Brazil also had a thriving manufacturing sector, including automobiles, textiles, and electronics. Additionally, tourism played a significant role in generating income for the country. Expenses. Brazil's expenses included government spending on social programs, education, healthcare, infrastructure development, and public services. The government also invested in initiatives to reduce poverty and income inequality. However, inefficient bureaucracy, corruption, and inadequate infrastructure posed challenges to effective expense management. Taxation. Brazil's tax system was complex and burdensome. It included various taxes at the federal, state, and municipal levels, such as income tax, value-added tax, VAT, social security contributions, and import duties. The high tax burden created challenges for businesses and discouraged investment. Political turmoil. One of the significant factors contributing to Brazil's economic collapse was political turmoil. Corruption scandals involving high-ranking politicians and business leaders eroded public trust, leading to instability and economic uncertainty. Political gridlock hindered necessary reforms and effective governance. Economic mismanagement. Brazil faced issues of economic mismanagement, including excessive government spending, budget deficits, and high levels of public debt. Inadequate fiscal discipline and an over-reliance on debt financing strained the economy and reduced investor confidence. Global economic factors. External factors also played a role in Brazil's economic collapse. The global economic downturn, particularly the decline in commodity prices, negatively impacted Brazil's export revenues. Reduced demand for commodities, coupled with a stronger US dollar, affected the country's trade balance and weakened its economy. Unemployment and poverty. The economic collapse resulted in a significant rise in unemployment rates, as businesses faced financial difficulties and had to downsize or shut down. Job losses disproportionately affected vulnerable populations, leading to increased poverty rates and income inequality. Inflation and currency devaluation. The collapse of the economy contributed to high inflation rates and currency devaluation. Inflation eroded purchasing power, making it harder for people to afford basic goods and services. Currency devaluation affected import costs and increased the burden on the already strained economy. Government austerity measures. To address the economic crisis, the government implemented austerity measures, including spending cuts and tax increases. These measures aimed to reduce the budget deficit, restore fiscal stability, and regain investor confidence. However, they often resulted in social unrest and further economic challenges. Reforms. To revive the economy, Brazil needed to implement structural reforms to improve the business environment, enhance competitiveness, and reduce bureaucracy. Reforms in areas such as taxation, labor market regulations, and public administration were necessary to attract investment and foster economic growth. Diversification of the economy. Reducing dependence on commodity exports and promoting economic diversification was crucial for Brazil's long-term stability. Investing in innovation, technology, and other sectors with high growth potential would help create new income sources and mitigate vulnerability to global economic fluctuations, social programs, and poverty alleviation. Despite the economic challenges, it was important for the government to continue supporting social programs and initiatives to alleviate poverty. Targeted programs focused on education, healthcare, and income redistribution could help reduce inequality and create a more inclusive economy.